and Facebook. Okay, wonderful. And I'm gonna get rid of the waiting room. If anybody else that comes in can just pop in and out as they see fit. All right, so fantastic. Good afternoon or good morning or good evening, depending on which time zone you're in. Welcome. My name is Darren Joseph, HEJ.tax. We do these live streams. I used to say I could do these live streams every week, but now that we're in tax season, we've kind of had to put them on the back burner for a bit. So for those we haven't seen in a while, it's good to see you again. And for those that this is the first time, we do these live streams fairly regularly. You can see what's coming up next on our website, HEJ.tax. On our YouTube channel, we have well over 1,000 videos, and our main website, we have over 2,000 articles that we think hold great value on matters of international tax in general, but US international in particular. So today, we're going to look at Iberia Unlocked. We're going to talk about the attraction. I mean, obviously, there's a lot of demand, there's a lot of interest in what's going on both in Spain and Portugal. But we have the expertise of Andreas and Todd to keep us focused in the right direction and answer all those really complicated questions. We get a lot of questions. I just need to say that up front. We get really a lot of questions. So I need to apologize in advance. We have an hour. So we may not be able to get to your question in particular. And if not, we'll probably be able to deal with it at a later date. So we apologize in advance. So without further ado, I introduce you to Todd and Andreas. Gentlemen, would you like to introduce yourselves?
Let's go first, Todd.
All right, thanks, Andreas. Hi, everyone. My name is Todd Cowan. I'm an executive director and certified financial planner at London and Capital. We are an independent wealth advisory firm based in London. We have a very unique regulatory approval pattern, which allows us to advise individuals in a number of jurisdictions. We are regulated in the US with the SEC, we're regulated in the UK and the Channel Islands through the FCA, and we're regulated in Europe through the CNMV. And I was explaining earlier that we actually have custody arrangements in the United States, in the UK, Jersey, Guernsey, Luxembourg, Switzerland. And what that allows London and Capital to do is to provide a borderless wealth management approach to our clients. So that's really us in a nutshell. We work with high net worth, ultra high net worth clients on kind of all matters wealth management and provide that solution truly cross-border. So that's where things start to get a little bit, I guess, complicated. But complication is what we really thrive on. So,
yeah. Wonderful. Thanks for that, Todd. Andreas, welcome back.
Thank you. Thank you very much, Darren, and for having me again. For the audience, my name is Andrés Gutiérrez. I am a senior consultant lawyer, head of the Spanish office here at Henley & Partners. And at Henley & Partners, we have two main lines of business. On one side, we advise clients, private clients, high net worth individuals, successful businessmen in their citizenship and residence planning in over 35 different jurisdictions across 40 different offices all across the globe. And on the other hand, we have a thriving government advisory practice where we advise, again, governments from all over the world in everything that has to be with the creation, setup, improvement of regulations and programs that bring foreign investment to their shores and basically grant the applicants with residency or citizenship rights.
Wonderful. Thank you very much for that. And just to create context, we're all licensed accredited professionals, which means that nothing we say here should really be construed as advice. We're having a general conversation about general principles. And if it is that you're looking for actual actionable intelligence, actionable intel, you want to make next steps, you probably need to seek out and retain an advisor who will know your needs inside out and can advise you accordingly. At the end, we will provide contact details about Andreas and Todd, and you can reach out to them directly for your specific situation. But at this point, general conversation, general principles, and this is how we stay on the right side of the law. So, okay, without further ado, let's jump in. Andres, I think this first question is better fielded by you. Someone is, and is there an update on the golden visas for both Spain and Portugal?
Well, actually, it's been, as many of you may know, it's been quite a hectic time over the past couple of months on investment migration. So basically, right now, in terms of Portugal, we have the changes to the Portuguese golden visa that at one point or the other is going to close. It's going to be replaced by the D2 entrepreneur visa once the bill is passed through Parliament. In the new law, it is promulgated. For now, the important thing is that the Portuguese golden visa will remain open for new applications that are submitted until the new legislation is published, which means that there's no retroactivity or anything like that. So my recommendation is that for those advisors, for those clients that are interested in applying for the Portuguese golden visa, this is your time to get things going, because the program is going to change. It is not going to look like we know it today. In terms of Spain, there has also been on the news for the past week that the ministries are looking to revise or update mostly everything that relates to the real estate route. However, that it is something which remains the very low priority for the Spanish government. And in terms of everything that is to be with real estate and hiking prices and etc., you have to take into consideration that basically just to give you a number on the applications for golden visas in 2022 that were supported by real estate, only 14% of the global total were properties used for applying for a golden visa. So the market, the impact that this can have, it is minimal. The Spanish real estate market, as we all know, it is a local market. It is not necessarily international market, apart from the Balearics and certain areas. Which then it is European, and then obviously you have some investors from abroad. So we have to see, we have to wait and see for these changes. These changes, they need to go, if they happen, they need to go through parliamentary route, which this will take months for it to happen. So we are monitoring the ground very close. There's no changes in Spain. If they are not going to be applied retroactively. And basically, it is not going to touch the other investment routes, which are the 1 million euros in funds or term deposits, or the 2 million euros in Spanish government bonds. That's, to be honest with you, almost no one does, because for obvious financial reasons and minimum investment threshold.
Okay, thanks for that. So I guess probably the quick takeaway really is, if someone is thinking about it, you want to move quickly.
Correct. It is what I say to all my clients. It is make constant action. In the case of Portugal, constant and massive action. Just basically go for it. In the case of Spain, it is just like start getting things going. Because I don't know, perhaps next year we have a minimum threshold of 1 million. Who knows? And if you want to get in, just basically get in now. And that is the best way and the best advice that we have to, given the current situation.
Okay, thanks a lot for that. So the next question is, well, actually, I'm going to rephrase it a bit. Anecdotally, I know this is just purely anecdotally, but just in terms of inquiries and interest, how does Spain and Portugal compare? Is there one that's kind of perhaps more popular than the other, or are they just so targeting such completely different demographics that comparing them doesn't really make sense? What is your insight?
Well, my insight is basically that over the past few years, it is true that Portugal has been much successful. That is coupled by two things. Of course, I mean, you have the 5 years route to citizenship, and then you have the possibility to obtaining the NHR. So that is quite interesting for certain jurisdictions. However, Spain has always remained very interesting, especially for those who are for Latin America. So basically Mexico, Puerto Rico, down to the South Cone, Equatorial Guinea, Philippines, and then citizens of Portugal, Andorra, and Sephardic Jews. They can apply for citizenship of only after 2 years of effective residence in Spain. So that, coupled with the changes in Portugal, has seen, to be honest with you, a very big impact over the past month. I mean, we are seeing an increase of people that they are looking into Portugal and they're saying, well, I mean, this means that if I apply now, I will have a bottleneck and I will have to wait 1.5 years or 2 years for the biometrics appointment. And actually, Spain, it takes 20 days, in order to make the approval. So I may be better there, and I actually have a Venezuelan passport, or I'm from the Philippines. So it's just basically that sort of thing. We're seeing that a lot, basically, clients changing programs, clients comparing more than ever and looking for more optionality as well. So indeed, there is a high cap on interest on Spain.
Gotcha. And what about you, Todd? Like, what is your sense of what's going on in the marketplace right now?
Yeah, I would echo what Andres said. It's been my my experience over the last several years that the velocity of interest and conversations has been quite high in Portugal for all the reasons that Andres mentioned. The shorter route to settlement, the very attractive nature of the NHR regime. But what I've seen is that people that are interested in Spain are interested in Spain. So sometimes that if people are going with their heart, more times than not, they're going to Spain, and they will look past some of the taxation burden that they might be imposed relative to what they might if they're going to Portugal. But as Andreas very accurately pointed out, when it comes to route for origin, so South Americans, clearly Brazilians are going to favor Portugal from a settlement perspective. But when it comes to other South American countries, Spain seems to be a favored destination, clearly with Madrid being a very attractive location within Spain.
I think that's a really important point that you mentioned, perhaps just in passing, but I think it's super critical. Our experience as well is that, there is a narrative on certain parts of the internet that, hey, it's all about zero tax and finding some way to pay no tax. But no, when we deal with clients who are higher income earners, they're looking for lifestyle. And if the cost, they understand from their business people, they're successful. They know that everything comes at a price. So if I want to enjoy a certain lifestyle, I don't want to overpay for it, but I know I need to pay. So yeah, despite noises to the contrary, I think Europe as a whole, but Spain and Portugal in particular, are doing exceptionally well vis-a-vis all the other alternatives out there. Okay. Moving on to the next one. Todd, I'd be interested to get your perspective on this. What is the advantage, if any, I guess, of the Beckham law plus the non-lucrative visa over the new nomad visa that's available in Spain right now?
I think that's a good question, and I'm actually gonna pull out Andreas for some clarity on this. But it's my impression that that the Beckham regime only applies in two contexts. It's one, if you've been relocated for a Spanish-based business, then you can apply for the Beckham regime, and two, on the new digital nomad visa. So if you're, and again, I don't want to put out wrong information, and Andreas, you can maybe correct me if I'm wrong, but I'm not entirely sure that the Beckham regime would apply to the non-lucrative visa. And it's primarily because you're not working within the context of the non-lucrative visa. So two different pathways, clearly, but the Beckham regime obviously offers a very, very favorable tax position for individuals that are seeking relocation to Spain in one of those two routes, either through relocation or being hired by a Spanish-based company, or the new digital nomad visa, effectively allowing you to earn up to 600,000 euros at a flat rate of 24%, and without having to have the burdensome tax reporting requirements for that 5 years plus settlement years. So effectively, it could be upwards of 6 years, depending on when you arrive. But not having that foreign tax reporting requirement, whether it be Modelo 720 reporting or any foreign transaction reporting, can be a very attractive piece of the Beckham regime. And so clearly, it's something that if you're eligible to take advantage of, you're going to want to apply for that. But then taking this question in a second part, really immigration route is all going to be about personal preference and what works for you. Non-habitual, pardon me, I just lost it. The
Beckham law?
Non-lucrative.
Non-lucrative, thank you.
Yeah.
Because we got non-lucrative and we also have non-habitual residency. So anything I'm getting tongue-tied. So non-lucrative visa route is obviously going to be a great route for people that might want to be in Spain, but don't necessarily need to have any sort of employment earnings out of Spain. They don't want, they're not expecting to draw on the social benefits of healthcare or the state. It's literally about your pathway to Spain and potentially other parts of Europe for travel purposes. The digital nomad visa, obviously it's in its infancy. And again, I'll kind of maybe rely on Andres to round this out. It appears to be a very attractive visa pathway. Again, very new, but obviously it's, I think it's still being kind of fleshed out in terms of the specifics. People are applying for it already, but I know that it does seem to be of interest to a lot of individuals, specifically in my line of work, coming from the US, looking to take, well, again, residency within Spain in a manner which wasn't possible previously. So obviously not working for a Spanish-based company, but working for a foreign company, having preferential tax rates, and at the same time, not having that kind of burdensome reporting requirement that other individuals, Spanish tax residents, would have. Andreas, I don't know if you want to, add anything.
Just to add two things to that, as Todd was mentioning correctly, you got to think that the non-lucrative visa is a visa which is oftenly called as the retirement visa. It's a visa that allows you to live in Spain, and it is given to those people at the Spanish consulate of their domicile or their residency. And basically they can show proof that they have a certain amount of income. That's it, basically. They won't need to work here in Spain. So the conditions just basically of the Beckham's regime, one of them, it is, as Todd was correctly pointed out, there is basically a relocation to Spain due to a work contract. So in those cases, they are not compatible. I mean, a Beckham regime, it is going to be more, eventually can be coupled with a golden visa that is to be looked into with a tax advisor, of course, and eventually as well with a digital nomad visa, which is also to be looked into with a tax advisor, of course, as well. And of course, the moment that person relocates to Spain due to a job offer, for example. With a non-lucrative visa, it is not certainly a pathway because there is no work.
Right. So thanks for that. And absolutely, I completely agree with that. Non-lucrative, you're not supposed to be working anyway. But at the same time, if you're that successful entrepreneur who's just had a successful exit, you're sitting on a nice flat retirement fund, and you think, okay, well, Spain is definitely an option that I want to explore. There might be some sticker shock from a tax point of view, because after, whether it's 183 days or the center vital interest test is triggered, by virtue of, for example, having Spain as your place of habitual abode, then suddenly you're a tax resident, and you may be subject to a wealth tax, depending on your situation. You may be subject to an income tax because, I don't know if we touch on it in any of these questions later on, but definitely in our previous interviews, we went into quite a lot of detail as to how pensions and retirement plans are configured and recognized in Spain and Portugal that are different from the US. So you may think you have a pension, which under your quick reading of somebody's version on the internet, the tax treaty says you're not supposed to be paying any tax on it. And then, oops, suddenly, yeah, you are. You're going to be paying tax on Social Security. You're going to be paying tax on a pension. And maybe you're thinking, and again, depends on your situation. Is there an opportunity for planning here? Is there a planning opportunity? And again, this is not for everyone, but if it is that you're probably in that bucket of successful, higher income earning, higher net worth, then maybe there's a planning opportunity. Maybe the non-lucrative visa is not the right one for you. Maybe it isn't. And maybe you want to look at a planning opportunity that will take advantage of this new nomad visa, the Beckham law in a way that structures your affairs. Because one of the great things, the appealing things of the nomad visa and the Beckham law is that from a tax point of view, essentially you're a tax non-resident. Yes, you are immigration resident, but you're tax non-resident. And that is so, and to me, that's what makes Spain one of the most attractive value propositions on the map right now. The idea that you can live in Europe, have all the benefits, the infrastructure, the lifestyle, a pathway to citizenship, and that's your thing. But at the same time, at least for a period of time, it's not going to last forever. Nothing lasts forever. But for a period of time, you can be tax non-resident. So again, whoever asked this question, I hope we've answered it somewhat. It depends on your situation, but perhaps there's a planning opportunity. So yeah. Okay, scrolling down next. Yeah. Do you think at the EU level, well, we know the EU level clearly from the narrative that has come out around what has happened in Cyprus and what's happening now in Malta, with the certain legal issues, whatever. The EU, Brussels, may be slightly uncomfortable with the whole golden visa thing. We get that. But is Brussels also potentially uncomfortable with special tax regimes as well? Because and I say this in context, and when someone asks me something like this, I do recall, well, hey, once upon a time you could have moved to Portugal with your pension and it would have been zero. And then certain other European countries complained to Brussels, and then it was 10%. And similarly, there's been some, let's say, restructuring of the tax benefits of Madeira structures as well. And, some other European special tax planning opportunities that are disappearing. So again, stepping back, Todd, I mean, this is perhaps your space. What are your sentiments? What is your intuition? What is your experience telling you here?
Yeah. Well, I think it's a very interesting question that was raised by the participant. The one thing I would say is that in my travels, 15 years into Spain and 8 years on a professional level, speaking with tax attorneys, immigration attorneys, I haven't heard the concern about some sort of Brussels legislation or uniformity. As you rightly pointed out a minute ago, Darren, nothing lasts forever, and you can't rule anything out. So there certainly could be, the potential for some sort of EU regulation. The other side of the coin is that water finds its appropriate level. And as long as there isn't some sort of harmonization or general legislation throughout the EU, people will continue to find the opportunity that makes the most sense for them when it comes to either migration or how their pension might be taxed, and these will be considerations. I think the interesting thing is that here we are talking about kind of the potential end of the golden visa program, or at least a change when it comes to Portugal. And this is that water finding its appropriate level. I mean, rightly or wrongly, their government has taken a stance as to what that golden visa opportunity has meant to their local economy, and more specifically, real estate prices. And there most likely will be another Mediterranean country that will be the beneficiary of this, and then perhaps that Mediterranean country will then say, you know what, we've kind of exacerbated what we can take from an inbound immigration, and then perhaps it will focus back on Spain. And so, like I said, I kind of leave that other Mediterranean country out of the mix because we're talking about Spain and Portugal. But I do think that there is this cyclical nature of where immigration and more specifically retirees and money flows, and it has a lot to do with the lack of harmonization on this front. So, kind of tying it back, like you said, nothing lasts forever. It could certainly change in time, but I think the benefit of the EU and having opportunities to kind of go where you might want to from an inbound immigration relies on a little bit of competitiveness when it comes to tax rates and immigration law.
Andres, do you want to comment on that, or? Yeah.
It's just basically exactly on that. That was exactly what we're thinking. I mean, EU harmonization, etc. It is necessarily a good thing, and tax rates zero. They are just basically too aggressive. But we cannot think that all countries should have the same exact amount of taxation in terms of personal or private clients, etc., or companies, because every jurisdiction has their own particularities, and any jurisdiction has their own needs. So as long as, of course, it is not a reputable tax haven, it is just basically complies with the duty of reporting and etc. There is nothing extraordinarily bad to say I'm going to compete from a tax perspective, because what I want to touch base on affluent people, successful entrepreneurs that come here to live on these shores, that they are going to pay taxes, they are going to be compliant with all OECD standards, they are going to start their businesses, they are going to build more wealth for the people in the generations to come. And some jurisdictions may need that more than others, and that's fine. So that is my take, to be honest with you. If there is going to be an harmonization in the future, like Todd said, you never know. You never know, might happen. But at the same time, that it will be just basically the EU going too deep into the powers of each particular country. And there, of course, we're going to see some views against more than in favor, most likely.
Fantastic. Thanks for sharing those perspectives. Me personally, I mean, obviously, we're aware of the BEPS initiative, the base erosion and profit shifting. We know what's going on at the UN, OECD level. We know within Europe, within the OECD, we also have the MDRs, the mandatory disclosure rules. In Europe in particular, we have DAC 6, and we're looking forward. Well, it's on the horizon, DAC 8. So basically, once upon a time, there was a lot more leeway in terms of individuals in the opportunity to tax plan, and jurisdictions in their ability to shape attractive incentives. But over the last decade or two, we've seen an erosion of both individual and national sovereignty. We have a global minimum tax. We have the principal purpose test, which is kind of like what COVID has done to supply chain. Some people argue that that's what the principal purpose test is doing to the whole tax planning space. So there seems to be a lot of, to your point, harmonization, at least at that macro level, at the level of the multilateral institutional framework. And my concern, there was a so-called leak in the media as recently as today. So today, for those who are watching this in the future, we are May the 17th, and in terms of one of the political parties in the UK, they have as part of their policy proposals as the UK moves into elections to materially scale back the res non-dom incentive, and it appears as if there may be even bipartisan support. So I think perhaps both parties see that. So it seems as if there's not a conspiracy, but there's a consensus at the level of the OECD, definitely to cut back on what were previously legitimate and okay planning opportunities. But, as we say, well, this is a moving target, and we'll see what the powers that be have in the future. But, let's watch this space. Next question. This next question is it's a pretty detailed question. So Todd, I'll throw this one at you, and I'll just read it. I've posted. Okay, all right. I'm cutting through his introduction. So he has like a 3 or 4 part question. So his first part, I'll just ask the first part. Can you continue to invest in a Roth IRA while being a Spanish tax resident? Any downsides or better options?
Yeah, so I taking it head on, the answer is yes, you can contribute to the Roth IRA as Spanish tax resident. The caveat to this is that Roth IRAs are not treated for Spanish tax residents as tax deferred vehicles. So it's basically a look-through account. So as a Spanish tax resident, it would basically be considered a brokerage account. So you would, gains income would be taxed as a Spanish tax resident. But it doesn't preclude you from investing in it. So, it's kind of, it's neither here nor there. I mean, so I don't know whether you would actually want to continue, making that contribution. Perhaps if you were to leave Spain for, long enough to no longer be Spanish tax resident, then those contributions could be there for you, and the money from a U.S. perspective can continue to grow tax deferred. But it's just the one caveat that you're going to want to make sure that you understand is that from a Spanish tax perspective, you're not going to get that benefit of tax deferral on that account. In terms of, are there any better options? I think, was that the second part, Darren? Yeah. I think the interesting thing is, and I'm going to make an assumption here, if you're investing in a Roth, then you're probably U.S. connected as well, or at least a U.S. tax filer. And the challenge you have is that most, Spanish incentivized plans, whether it be Spanish compliant bond or Spanish private pension, are not really suitable investment structures or account structures for IRS filers. So, whether you're a green card holder or whether you're a U.S. citizen. So anything that you might get local resident in Spain from what otherwise would be a local resident in Spain's preferential tax treatment account structure is not necessarily going to work for, again, a U.S. connected individual. Conversely, again, the reality is that this, a Roth is not going to be a great solution. So you're a little bit boxed in. I do think that there is I do remember this on the front end there, and I think that the next question was, can they, continue to invest in a brokerage account in the U.S.? And the answer is yes. So a brokerage account in the U.S. will continue to be a good opportunity.
Right, but before we go there, so okay, so basically a Roth, again, it depends on his or her situation, right? So for example, imagine if it is that for this person, Spain is a stint, so they're there for X period of time, and eventually they will circle back to the US. Well, Roth is king. But if it is that Spain is their long term and they're seeing that as long term, and having a conversation with them, because I've been dealing with a client in Spain who's given up her green card. So if it is that they intend to give up the US tax status, then there's probably an opportunity for planning around Spain as opposed to around the US. But so it really depends. And to your point, you mentioned that things that may be tax efficient from a Spain point of view may be unhelpful. I'm thinking perhaps like a PFIC to from a US perspective. So perhaps it's an opportunity to sit with a professional like yourself or your team to look at your overall portfolio and look at your specific family objectives. And perhaps maybe it's not either Roth or something else, but it's Roth and something else. And you create a diversified portfolio that works to your specific needs. I'm just thinking aloud.
No, absolutely. You bring up a great point, because on those Spanish investment structures that can be efficient for EU nationals or Spanish nationals. These are situations where, as you mentioned, it's the underlying that really gets people, the underlying investments that really get people upside down, and those can generally be in the form of PFIX, because that's what the banks have to offer, whether it is, again, a Spanish compliant bond or a Spanish private pension, something like that. So you're absolutely right. That is what we're trying to solve around whenever we talk to individuals like this individual that had that query. But you rightly point out that if Spain is just stopping by, seeing what they know, spending some time, and then you're going to possibly move back to the U.S., then there's tremendous planning opportunity to continue to incorporate the Roth. It's more about just people understanding what they might be getting into or not being taken advantage of while they're Spanish tax resident.
Wonderful, thank you. So now jumping into the second part of this person had like a very longest question of everyone. But anyway, can you continue to invest in a regular U.S. brokerage fund while being a Spanish tax resident? And like a second part to that second part of the question, do you need to pay taxes on any dividends earned on this U.S. brokerage, Todd?
Yeah. So great. And you know what I'm going to do is I'm going to take it head on and say, yes, you can continue to invest in it, with one caveat again. And this one comes into the idea around custody and or a financial institution. And the reason being is because, right around 2009, 2010, in the wake of FATCA, a number of U.S. financial institutions started getting out of the business of working with non-resident Americans, individuals that moved overseas. And coincidentally, at the same time, a number of foreign financial institutions, foreign meaning non-U.S., were also kind of shuttering their doors to Americans that were looking for an investment proposition. And so it created this very, very kind of a vacuum by which very few operators can actually provide advice and then ultimately execution. So the answer is yes, you can continue to contribute to a brokerage account. You just want to make sure that whatever financial institution you're dealing with are comfortable, because whether you use, and again, no tax cops here, but if you're using a family member's address to be able to maintain that account, that may work for a time. But if the financial institution, and I'll just throw out a couple generically, I know for a fact, UBS, Fidelity, Merrill Lynch, Wells Fargo, there's a number of household names that Chase, JP Morgan. These firms have made a decision they're not really in the business of working with Americans that are outside of the U.S. And therefore, if they do find out, whether it be you volunteer it or you go and ask them, hey, I'm thinking about relocating, what can I do? From an investment perspective, they will ask you to find a new home. In terms of the taxation portion of this, basically, this is where tax treaties come into play. And Darren, I'll make sure that you can close this out in a more eloquent fashion. But if you are a Spanish tax resident, I mean, they're going to want to know all the activity and the accounts that you have held away once they reach a certain threshold. I think it's 50,000 euros in Spain. It could be 60. I just need to double check that. But they're going to want to know all the activity, and you could have tax consequences as a Spanish resident. And to the extent that those outweigh what the tax consequence might be in the U.S., perhaps there's an opportunity for foreign tax credits. But I'm starting to get a little bit over my skis on that front from a taxation perspective. But generally, yes. I mean, if you are U.S. connected, you have reporting requirements, and that will be what's going on in your U.S. brokerage account. At the same time, if you're Spanish tax resident, you're going to have Spanish-based reporting requirements, and Spanish resident, they're going to have first taxing requirements or rights. So.
Yep, absolutely. That's a running topic for U.S. exposed persons once you are abroad. The fact that your brokerage firm may not like you anymore. Now, I know that there are some forums and people talk about using a VPN, but we've had clients that use VPNs and they get caught out as well. I mean, think about it. If your Netflix knows that you're using VPN, then surely a financial institution is going to know as well. So
Yeah.
I don't see that being a long-term solution. To Todd, your point, definitely find out what the rules of your financial institutions are. And if they don't like you anymore, I'm sure institutions like maybe London and Capital may be
That's
happy
exactly right.
to work with you. So,
Yep.
and in terms of that second part of the question, I guess it really depends, because if the second part being the tax consequences, yeah, absolutely. If you have no protection, there's no planning, then yeah, you're under the full weight of Spain's tax system, which of course is pretty aggressive vis-a-vis the US. But if you take advantage of one of the special regimes that are available, be it, well, if you're in a golden visa, then you don't need to spend sufficient time and therefore triggers tax residence in the first place. So you have ultimate control over that. I think that is the ultimate benefit or tool that you have at your disposal, the full control of your taxability. Otherwise, if you're on a nomad visa, if you're on the Beckham law, then similarly, you may have some degree of control. It's not completely eliminated like the golden visa, but it's substantially reduced. So it's I guess it depends on the situation. Okay, the third part of this very lengthy question. Do you have any suggestions for someone in their 30s that's working as an autonomous freelancer in Spain, looking to continue building their US retirement and investment portfolios? I currently only have a Roth IRA and a typical US brokerage account. I'm unsure of whether I'll retire in the US or Spain, which is of course a question we need to understand. I currently feel that being a Spanish tax resident does not provide any tax incentives for any types of investments, at least US investments. Uh, Overall, the different taxes imposed in Spain seem very daunting and confusing. Todd, any comments?
Yeah, I think I would just echo what we kind of mentioned before in the previous answer, and that is that, you know, in this instance, given the fact pattern that the individual has shared, I believe they are Spanish tax resident, but they do seem to have US connections. So it's going to be challenging. And I think their assessment is accurate that there aren't a lot of compelling opportunities for them from a Spanish perspective to put money away in some sort of tax deferred manner. But all the things that we mentioned before about the Roth IRA continue to ring true in this instance, and that depending on what their long-term objectives are, it could still be a great tool. Yes, they can contribute to it. But if they do fall in love with Spain and they're going to be there long-term, they just need to be prepared to know what that means from a tax perspective on the Roth. And to the extent that, again, their financial institution allows them to continue working with them, it sounds like they're thinking about they're asking the right questions and they're doing the right things. Just continue socking money away, and into at least into the general investment account. And based on what we've shared, if the Roth makes sense for them, then it works for me.
Absolutely, and I think that's the number one thing when I speak to clients. Like I had a client yesterday, Americans moving from London to Spain, coincidentally, and asking them, what are your plans? And they're like, we actually don't know. And the point is, when you don't know where you're going to be, nobody can advise you, because the tax planning or investment strategy around staying in Spain for the rest of your life will be way different from returning to London or going back to the US. So you need to understand where you want to be, and then you can build a tax planning or investment strategy afterwards. So yeah, okay. All right, so whoever asked that really long question, I hope we answered it. So this person, to give their name, I'm not going to say it, they're Mexican and US citizens. They have a rental portfolio, so the net rental income from US portfolio properties exceed 300,000 per year. They also do consulting to US company. They work remotely, and So I guess they're looking at Spain. So they're asking, is a nomad visa the best route uh, as a US or Mexican citizen? Also, will I be taxed on a rental income in the US and Spain? And last, will assets in the US be subject to Spain inheritance taxes? Uh, Andreas, Todd, who wants to take a look at that question?
If one, I can
Yeah,
check a little bit on
please.
the immigration side, basically nomad versus golden visa. So at the end of the day, the nomad visa will just basically look into the certain requirements of moving here, working remotely, etc., and etc. So it's just looking into complying with those requisites, and also on the amount of flexibility that that individual wants to have, because with that amount of income and with those streams of income from other parts of the world, it's probably that they have a sort of lifestyle that they may not be most of their time in Spain with a nomad visa. So my recommendation there, it is, especially if they are Mexican, it is basically to look, I mean, it will apply with a nomad visa as well, but with their lifestyle, it is looking at a golden visa that will allow them to live in Spain, basically not having any particular ties with their consultancy work, because it seems that they want to move and be free on that side, and link their residency rights to a property or financial asset investment in Spain that allows them to have a base here to go around Europe, and in 2 years' time, provided that they are the vital center of interest that is in the country, and if it is their thing, apply for citizenship, and then just basically relocate to, I don't know, they can go to Portugal and apply for the NHR, they can go to Malta and apply for an non-dom. They have various different options once they are European citizens. So that is my take. It all depends at the end of the day, to be honest with you, on the stage of life that you are. I mean, if you're actually, moving around with your consultancy work and you have a lot of activity that you can do abroad, yeah, I mean, the nomad visa, maybe you're right. But if you are in a more senior position, you have just basically consultancy fees that give you certain flexibility to go here, to go there, and you don't want to be locked up in one place, and you have the financial means, I think that basically the golden visa will be the thing. But we have to look into every particular circumstance before being able to give proper advice on the immigration side.
Todd?
Yeah, I think I would just add on the idea of the digital nomad visa. I think it's important that the individual considers whether, because I do believe there's some rules around what might qualify an individual to apply for that in terms of whether they work for a company. Because I have seen some instances where people were self-employed or they had consulting work, and based on some of the immigration attorney conversations I've had in Spain, I don't know that those would necessarily apply. I think it's an opportunity for a discussion with a Spanish-based immigration advisor to find out if this particular individual's circumstances fits within the construct of the digital nomad visa.
Yeah, completely agree with you, gentlemen, that, if it is that you are having rental revenue streams in excess of 300K, then your portfolio is definitely into at least 7, maybe 8 figures. So I'm concerned about you with your wealth tax, and that plus your other income flows, your other investments, probably just in a regular year, you're in 7 figures already. So I think you definitely want to look at some planning, and the best option on the table, as Andreas has said, is probably going to be a golden visa. That puts you in the driver's seat. You are in control with that golden visa. So this person, I think that's definitely something you're going to look at. In terms of the inheritance taxes, well, inheritance laws in Spain, my understanding is that, like in most jurisdictions, even the US, it's a specialized field and it's very, very complicated. So, but generally speaking, you're only looking at Spanish citrus assets. And if that is the case, there are specific, well, in continental Europe is different from, and I guess this person being dual US Mexico, they probably have exposure to it in Mexico anyway. So all Roman civil law. So there's some forced heirship issues. So you probably want to sit with a Spanish, the equivalent of an estate lawyer, and
I
get,
mean,
yeah, and get that kind of sorted. You guys have any comments on the inheritance tax piece?
just very, very broadly, it is important to understand that basically in Spain, inheritance tax, like other taxes, there is tax competition within the different autonomous communities in Spain. So there is a reason why a lot of people go to Madrid, because, for example, inheritance tax basically is very, very little, if not even null, when you compare it to Barcelona, for example. So basically, my key takeaway for that, it is first speak with a private client tax lawyer here in Spain that will check the tax position if it happens that, succession happens when you are here, or if you have goods here. It will help you as well with all the tax planning, all the structures that you have outside of Spain, and will help you with all that you have as well to draft a will with all the jurisdictions, which is something that, to be honest with you, when I have clients that they come to Spain, that they apply for a golden visa, that they are in their not necessarily 50s, but 60s, 70s plus, it is something that I always recommend. A, speak with a tax lawyer. B, speak with a private client - tax lawyer. So you have your wills and probate completely done, and it is straightforward for your successors.
Yeah, and it could be again very nuanced. And from in the US, the area of tax practice with the greatest amount of litigation is estate taxes, right? So there's always going to be an argument over that. It's very, very nuanced. And to your point, if it is that this person is already dual Mexico US, so they need an estate plan that looks after the Mexican citrus assets, one specifically for the US. And if they're going to be investing in Spain, then they'll need something specific for that. So you'd need three plans that kind of but speak to each other and recognize each other. So that's definitely the best way forward. Next question. A UK, so a UK ISA, private pension, is it excluded or included in the Spain wealth tax? Todd?
Yeah, I think that it's a good question. From my perspective, I'm not, again, you caveated us very well at the outset there, and in terms of, not advice. That said, I am not fully up to speed on the Spanish UK tax treaty, but what I do know is that Darren, I don't want to throw it back to you so quickly, but my understanding would be that it's very possible that it would be caught up in unless they're involved in the Beckham regime, or they have some sort of tax favorable status within Spain. If they do have wealth tax exposure, an ISA would certainly form part of that. But again, I almost caveat myself to make full representations. And again, it's more my understanding. I'm almost applying other experiences against this particular instance. So I apologize for maybe passing it back to you to get the good.
No problem at all. So yeah, this is something that we get into in a lot more detail in some of the other talks that we've done. Also on the website, we have an article that dives into a lot of detail. I'm totally absolutely correct. It really depends. Are you in one of the special tax regimes, nomad, Beckham law, in which you're immigration resident, but not tax resident anyway? So the answer is going to be nothing is included, right? So that, but if it is that you don't have the protection, you're not on the golden visa, you're not on the Beckham law, you're not on the nomad visa, then yes, chances are your ISA may be included in the wealth tax calculation. But of course, you'd want to sit with someone and get advice relevant to your situation. Where are you in Spain? You know, are you in Madrid or are you in Barcelona? Are you in the Basque? Are you, where are you? So what is your overall situation? We'd need to know. So, okay. Looking down. Okay, inheritance tax. If the heir lives in Spain, but the deceased lives in the US, would the heir be taxed in Spain, or would the same rule apply where it would be taxed under the rules of the deceased, i.e., in the US? That's a bit complicated. Todd, any initial thoughts?
Well, I think we touched on it briefly earlier,
Yeah.
but yeah,
Yeah.
this obviously is, I think, another one
Mm.
that creates a great opportunity for a conversation and some planning with a tax expert, especially on the estate side. So it's one of those ones where conceptually I have conversations with individuals and tax attorneys and estate planning attorneys in Spain all the time, but it's really not my remit to weigh in on. So I do
Okay.
apologize.
No problem. So what I'm gonna do is I'm gonna skip all those around inheritance taxes, right? And let's go to Kevo. So okay, I'm a Spanish tax resident with an American LLC. Should I pay taxes both in the US and Spain? How are the steps and procedures in that case? Any comments on
So
that, Todd? Or no?
yeah, so I mean, I think that for a Spanish tax resident, it sounds like that you're definitely going to need to be reporting this income of the US LLC to the Spanish tax authorities, and to the extent that you have a liability, you're likely to be on the hook for that. And again, this goes back to the idea that if that liability is more than what you might otherwise pay in the US, maybe there's foreign tax credits by which you're going to accumulate. But again, if you're not on a favored tax regime, then I would, which I don't know in this instance, if there would be some sort of combination between digital nomad visa as well as Beckham regime, and allowing you to plan around this. But I would think that if you're a Spanish tax resident and you have that LLC in the US, at minimum, you're going to want to be you're going to need to report that to the Spanish tax authorities, and there could be a liability on that.
Okay, gotcha. I think this is quite topical, not just in Spain, but both in Spain and Portugal. And I see a lot of debate around this topic online. And unfortunately, we see people representing themselves to be credentialed tax professionals actually offering it and selling it as a solution. And there have been cases in the equivalent of the tax court in Portugal that I've seen in Portuguese and in English, and I'm sure the same is in Spain. I've seen stuff in Ireland, in Israel, in France, in the UK. So this has been knocked down time after time after time. If it is that you have an LLC, particularly if it's a single member LLC, so you're basically perhaps a one-person show, and you just use the LLC as a vehicle for isolating yourself from liability and invoicing your clients, marketing, or whatever. But the point is that it's you. There's no way you can rely on the treaty to treat it as dividends and get the reduced tax rates, or under the special under NHR and get zero tax. It doesn't work like that. It's you. So therefore, at the very best, it'll be treated as business income or maybe as personal income. But from a European perspective, it's not usually a tax planning opportunity. So that much is clear. Whatever income it is that you're earning, it definitely needs to be declared to both Spain and US, unless, of course, as Todd said, you under one of the special regimes. But it needs to be declared. Taxes will be paid in both. If your tax team knows what they're doing, you will not be double taxed. And this has nothing to do with the treaty, because most developed countries recognize the principle of foreign tax credits. So you get a credit to offset against what has been paid elsewhere. So typically you'll be paying the higher of the two jurisdictions is the quick way of wrapping your head around it. So that's a quick answer. If it is that your LLC income is pretty substantial, then you'd probably want to sit with a professional who understands both and look at some options from a planning perspective. So with that, we come to the end of our hour. And I apologize for those who sent questions in. We did not get a chance to get into everything. So what that means is that we'll have to do this again. And since a lot of those that came in, which is quite different from before, were really around like inheritance taxes, maybe we'll try and get someone, because none of us are experts in Spain or Portugal inheritance taxes. So we'll probably try to get some sort of, okay, yeah, you're welcome. So we probably try to get an expert to address those questions, and we will have another session as soon as we can. Thank you very much for joining. Again, this is published on over 24 podcast platforms, basically iTunes, SoundCloud, Spotify, wherever it is you get your favorite podcast, you're going to get this. This video will be on YouTube, as well as on our website. If you would like to reach out and you want to speak to Andres or to Todd, what's the best way, Andres? What's the best way to reach you?
In my case, email, it is the best way, which is my name, Andres.Gutierrez. I'm going to write it down, Andres.Gutierrez at henleyglobal.com. That's the best way to do it.
Okay,
Andres.Gutierrez at henleyglobal.com. And Todd?
The same email works for me. It's forename and surname. So Todd.Cowan at londonandcapital.com, all spelled out, londonandcapital.com.
Fantastic. Gentlemen, thank you very much for your time and your expertise, and we'll see you next time. Bye-bye.
Thank you. Cheers. Bye-bye.
Thank you.
Yes.